Good morning, everybody. Good morning, good morning. What is today? Tuesday, 29th of March. We have almost made it through a quarter of the year. Holy smokes. I love it. Nice to see you guys here. We'll give it a couple minutes as people show up. Hamid, good morning. Carl, good morning. Daniel, nice to see you. Let's get that disclaimer off. We have satisfied the lawyers. I have been up for hours. I'm excited for this classroom. Been busy watching markets, recognizing patterns, waiting for things to present themselves. Guys, I'm about 30 pictures deep this morning. Not sure how many you've taken, not sure how long you've been in front of the market. But man, I'm snapping pictures like it's going out of style. Taking pictures of patterns, entries, management, all those things so I can be a better trader. Hopefully you're doing the same. My name is Mark Novak. Uh-oh. Your Ninja 7 just went away? It's all right. Set it free, Ed. If it comes back, it's meant to be. Or something like that, right? Hey, Ed, one thing I remember John talking about a long time ago, and maybe this will help. When you write on your charts over and over, it creates layers and layers and layers and layers, and it makes NinjaTrader work harder. Go through, maybe just at the end of every day, remove all your drawing objects, and then maybe even a better idea. Well, that's what you get. That's the universe telling you to keep it on 3 charts, man. That's the universe saying, Ed, stop overthinking it. Keep it simple. NinjaTrader's got an Ed clause in there. Awesome. So guys, we are going to have a good time today. We're going to talk a lot about rules. We're going to talk a lot about building a plan, getting you where you want to be. I know that I have new users in the room. I know that I have demos in the room. If you are brand new to Nexgen, if you are working your way through learning the software, let me show you my favorite picture because I think that this is pretty important for you guys to understand. In the beginning, we're drinking from a fire hose, and that's okay. I know that I've got a lot of you that are brand new, and it feels this way for everybody. There's a lot of information, but this phenomenon lasts for a few days. If you participate in the room, if you post your thoughts, if you post your questions, what you'll find is that things begin to slow down a little bit. So if you are brand new, and I do have a list of who you are, I may call on you today. I may ask you a question. I want you to ask me all the questions. Guys, this is for older users as well. This is your classroom. This is not a 3-hour lecture. This is 100% dedicated to you guys and your education. Be proactive, be active in your education. Every morning when I start off, I'm going to go to forexfactory.com/calendar. I'm going to look for news. Today, Tuesday, March 9th, we just had a couple very low impacts. FOMC member Williams speaks, HPI. Both of these have just happened recently, but at 10 a.m., we're going to have the JOLTS job openings. It's a high impact. We're going to have consumer confidence. It's a medium impact. Both of these have the potential to move the market, to make it act erratically. If you're not in a trade, maybe stay out of the trade. Let it sort itself out before you decide to jump in, before you take a trade into an emotionally charged market. If you are in a position and news is coming up, make sure that you're protected. It does have the potential to move around erratically. Anything and everything that I talk about, you're going to be able to find from the education page, nexgent3.com/education. This is going to be your one-click shopping. It's pretty amazing how much information is put on two little links on this page. 20 years of knowledge. And it's all available to you to scroll through. Starting with the user guide, this is just NinjaTrader how-to. Opening charts, closing charts, scaling charts. So often we get people that don't know that your black highlighted price is your most current bar. And if you ever get to a position to where you simply don't see that bar, it doesn't mean that your 13.2 chart's broken. Just look for that arrow, upper right-hand corner, and it'll always bring you back to the most current bar. You can vertically scale with the vertical axis horizontally. You can stretch things out if you like. You can tighten them up, but man, that's going to be difficult to trade. So if you ever find yourself squished or you don't see any of your indicators, click the capital F, and it brings you right back to that full tilt. Work on your scaling. Make sure that you understand how to do that, because you will be in the middle of a trade at some point and accidentally knock your screen sideways. You want to know how to get back quick. Also in the user guide, connecting, closing Ninja, setting up stops and targets, removing trade markers, adding trade markers. And then the one that we need today, adding symbols, rolling contract. If you are looking at gold, we are on the June contract, which means that you'll need to go to Tools and Instrument Manager. Good morning, Jose. Type in GC and look, gold futures, 622. You want to press that right arrow and put it into your instrument list. And then what I like to do is if I go to my gold workspace, I've turned the L on each of my charts the same color. If I click that L, this lets me know that the charts are linked. So what that means is that I can go to this drop-down menu, pick the 622 contracted gold, and just by adjusting it on one chart, it's going to roll it through all of my charts. So make sure that you're on the correct contract. We also use, if you're not sure which contract to work with, the market analyzer. You open it up and put in your default analyzer, and you can add your instruments. I can do the old gold contract and see where it's trading. And then I can do the new gold contract. And you can see that the prices are similar, but the volume is different. So we are rolling over to that 622 contract. It's trading 52,000 more contracts than the old one. All of this stuff is available in the user guide. How to build charts, applying templates. I always encourage new users, break all you can on simulator so that you learn how to fix it in a no-risk environment. Also from the tutorial page. And I'm giving you guys these links. I think these are real important. This is your tutorial section. Everything that I talk about comes from the tutorial section. We are building a foundation, and we're going to do it in simple, manageable steps. It's important that you understand that you will grow with the software. The more you see anything, the more you recognize, the more patterns you get into. We had a gentleman yesterday say that he probably wouldn't touch half of the trades he took a month ago because he's grown with the software, recognized patterns, and that's the goal. Tutorial section starts with your indicator descriptions, and then it goes into recognizing whether the market is going up or down. My goal for you guys is to be able to recognize and take a high probability trend trade. That's going to be our foundational trade. It'll be the first trade, and it'll be the majority of what we speak about today. So if you're going to do that, it's important to know which direction the trend is going. There's also a section called chart reading, and I think I copy paste this one every day because this is so important. What we are going to do as Nexgen users is we're going to learn to read our charts. And it's from our ability to read the charts that we will be able to locate the correct trades. We are going to understand where the market is likely to continue. These continuation points will be entries for your high probability trend trade. We're going to be able to recognize where the market is likely to go as we build a management plan. Where the market is likely to go becomes targets. And then the most important, I feel, is where the market is likely to stop. And we call these termination conditions. An area where the market is likely to stop is our signal to no longer take trend trades. So we're going to put this all together. We're going to utilize our indicators. And our goal is going to be to recognize where the market is likely to continue, likely to go, and where it's likely to stop. And likely to stop is so important. There's an entire section dedicated to it. And then it moves on to the trend trade. This is your foundation. This is your Plymouth Rock, your solid platform from which to build. There's only 3 rules on the high probability trend trade. And if you focus on making sure that each of these rules are met, you're going to put yourself in the best position for success. We have areas discussing entries, management, profit target and exit areas, a little bit about the market flow analysis, and then the second trade, we'll probably discuss this one towards the end of the day. This will be the second trade that we look for, the high volume area trade. And it utilizes all of the same elements as the high probability trend trade. So we'll take the knowledge that we build from that foundation and we'll expand our plan. There's this section dedicated to market replay. Being able to replay the market as though it were live, one of the greatest tools we have is repetition. So as you're learning the software, trading live during the day is amazing, but going back at the end of the day, replaying the day, fixing your mistakes, catching the trades that you missed and missing the trades that you shouldn't have caught. It'll help you work on management, recognition. But you can take a week where maybe you get 50 trades and turn it into a week where you take 150 trades, just reinforcing and building good habits. There's a trade tracking sheet made available to you. We're going to discuss how to use that one in a little bit, a whole section on the psychology of trading, an example trading plan. Trading is your business. We're going to build a plan. And then John Novak was nice enough to sort out probably the most important videos for new users. And I want you to look at the contents. Trend trade example videos, trend trade visualization video, trend trade and divergence, live class video, trend trade specific, 4 videos dedicated to the high probability trend trade, and then a video teaching how to go back and replay the market so that you can practice those skills. There's a section, 1 video dedicated to termination conditions, areas where the market is likely to stop. Then one of John's live classes from, I'm not sure when this one was recorded. And then one of my live classes, 101. This is a basics class. This one was recorded back in May of 2021. And then another section on recognizing tops and bottoms. John's added sections for swing traders, cryptocurrency. And then the glossary of common terms. I'm going to pick this one today because I'm hoping for an awful lot of participation. I want you to post pictures. I want you to ask questions, and I want you to participate in your own education. Don't be scared or intimidated. Post questions no matter how trivial you think they might be. Someone else probably has the same question. So guys, all of this comes from the tutorial page. And what we are going to do is we are going to build a plan, a solid foundation to help us get where we want to be. And I like to share this. Searching the web, advice for new traders. I know that we have a lot of new traders in here, and some of you are just new to Nexgen, and that's okay. But I love this. Make your goals about the process, not the results. Make your goals about chart reading, understanding where the market is likely to continue, understanding where the market is likely to go and where it's likely to stop. Work on the process, the results will come. Always have a plan. Trading is your business. In business school, you're taught to have a trading plan. Know what you're going to do. Have a concrete set of rules that are going to get you where you want to be. Keep it simple. Avoid getting too fancy with your analysis and trading strategies, making a winning trading plan more complex. Good morning, Elvis. When we discuss the high probability trend trade, we're talking about 3 rules that happen on 2 charts. Don't expand beyond that. Embrace the simple. And then the most important thing that I feel like traders need to discipline themselves on, and probably the hardest one because we're human, is learn not to trade. Because the market does not present statistically probable trading opportunities at all time. Commit yourself to understanding your rules and commit yourself to only trading when your rules are met. Then the bottom line is stay focused on manageable goals. Don't worry about your profit and loss on simulator. Focus on the goals. And that's my segue to how to build your trading plan in the beginning. And it will be small, manageable goals. It will be a definite order of operations. But the first thing that we need to do is we need to define what is our trade. What is it that we're going to be looking for? And I want you to use the words. Put pencil to paper, crayon to paper, whatever you need to do. But write this down. Somebody once said that if you don't write down a plan, you don't have a plan. My trade is, as a brand new user, good morning, John Novak. As a user trying to find consistency, my trade is the high probability trend trade. The trend trade, when the rules are followed, when executed properly, has been back tested over hundreds of hours, thousands of days, by Nexgen clients, by Nexgen staff. And what we found is that when you follow these rules, a 70 to 80% win percentage is realistic. One of our clients was right at 82.6, but I like to say 70 to 80. I like to give you that range. So we're going to say my trade is, and we are going to use the high probability trend trade rules, and we're going to write those rules down. We're going to put them in our own voice, and we're not going to trade John Novak's rules. We're not going to trade Mark Novak's rules. We're not going to trade Nexgen's rules. We're going to trade my rules. My trade is. And then the work starts. Then we're going to take 100 pictures of those rules being met. 100 pictures of high probability trend trade entries. So our first manageable goal is recognizing entries. Creating trust in our rules, the belief in the reliability, truth, ability, strength of. Creating trust in our rules and always taking this trade from the best to the best area where the market is likely to continue. That's our first step in building a plan. Our second step is management. And because I'm brand new, because I'm not completely sure what I should be looking for, I'm just going to go to the profit target and exit areas. And I'm going to steal from John Novak, steal from Nexgen, that I will exit at $100 on my first contract and $200 on my second. And when my profit is realized on the first contract, I will go break even +1. And I'm going to commit to this. I'm going to be void of opinion or emotion. And I'm going to let this play out every trade for the first 100 trades. And what's going to happen is every picture that I study, I'm going to recognize when I could have held for a longer move. I'm going to recognize when maybe I should have gotten out of the trade sooner. But I'm going to stick to this plan in the beginning so that I can create consistency, so I can recognize patterns in the market. This is one of my favorite ones and one of the most underutilized tools in the education process. Commit to 15 pictures a day. Pre-trade, mid-trade, post-trade, termination conditions, rules being met, rules not being met, patterns that you recognize. Guys, I can tell you that on any given trade, I might take between 2 and 5 pictures. I'll typically take a picture before I get in. I like to take a picture as the trade is happening. I like to take a picture after the trade to see what happened. Sometimes I'll take pictures mid-trade and I will annotate my charts for management reasons. I was notorious for trading in termination conditions when I first started out. I had trouble recognizing them, so I began taking pictures of termination conditions. And one of the most important things I can do with each and every picture is I need to annotate that chart. I need to write down on that chart everything that I see. So if I have my charts and I have that capture software that you downloaded when you started, I'm going to click that big red button. And this is a click and drag tool. You can see that if I hover over a chart, it'll just pick one chart. But if I left click at the top left and drag it down to the bottom right, it'll give me this camera icon. And by clicking it, it's going to give me a preview. And this is how we are going to have a conversation. We're going to point things out with the arrow tool. Maybe we're going to have shapes, areas that we're interested in. But the most important tool that you're going to use is this call out button. What do I see? Are my rules met? What are my rules? Why did I trade? Was there any emotion, nerves, anger, worry? Put it on your chart, because you and I are going to have a conversation via your chart. When you have all of this on there, there's an upload button in the bottom right-hand corner. And when you click upload, it'll go directly to your screencast account. And your screencast account pulls those pictures into the cloud and allows you to share them in the classroom by clicking copy. It's going to put that link on your clipboard until you click again or copy something else. So the first thing I'll do is I'll paste it in the room and I'll hit that button. Now that link is in the room, and now I'm going to wait patiently to have that link clicked on by Mark, that's me. And we're going to go through and we're going to analyze your charts and we're going to read your annotations. We're going to see what you said, what you didn't say. We're going to recognize areas that you got in. And if there's any information that I can give you to help you do it better, I'm going to give it to you. I'm here 15 hours a week to make sure that you get the help that you need. So take those 15 pictures a day, annotate your charts, and please, please, please share them in the room. And then we're going to track those pictures in a spreadsheet. Again, from the tutorial section, there's a trade tracking sheet. And this is going to be your trade journal. Even the CME recommends that you have a trade journal as you learn to trade. Your first tab is where you're going to put your trades. Every time you take a trade, you're going to log it So I'm going to take one of these cells and I'm going to right click. Whoops. Oh, this is John's. I'll take one of these cells and I'll right click and I'll paste that screencast address in there. And I'm going to turn it into a hyperlink. I'm going to make it so I know exactly what's happening in that picture. I'm going to do that with the insert button and slide over to this link button. And this gives me the ability to create a hyperlink. I'll paste one more time the address, just like I'm going to Google or Amazon. And under text to display, I might put win or loss, management question, whatever's happening in that picture. I'll click OK. And now I can come back and study all the time. You find that you let go opportunities for not being able to spot them on time, Jose? Stop shouting at me. No, you're good. You know what fixes that? Jose, it's the easiest fix in the world. 15 pictures a day. When I started trading, I struggled catching them, and it seemed like the market was moving so fast, and I was a day late and $1 short. Now at 3,580 pictures, I recognize patterns before they happen. I know my rules so intimately that when they're met, I'm able to take those trades. So Jose, keep taking those pictures. Keep taking those trades. It'll slow down for you. First tab. First tab is your trades. Second tab is where you're going to start that collection of 100 pictures of their high probability trend trade. There's going to be a section for your trade setups as you grow management, patterns that you recognize. There's a whole section dedicated to areas where the market is likely to stop. Your analysis on market flow. All of this is made available for you so that you can create recognition. Nexgen users were nice enough to post in the room, picture after picture after picture. Guys, on this particular downloadable spreadsheet, there's 156 pictures of high probability trend trade rules being met. 156 examples. That's 56 more than we talked about you finding for yourself. Download the spreadsheet. Look at these examples. There's no reason to not be able to recognize it. And then John Novak was nice enough to give you some of his favorite looks, things that he looks for to get in the market. John Novak is sharing 27 years of knowledge in easily to follow links. So make sure that you're getting the spreadsheet. Make sure that you're utilizing the spreadsheet. If you have any questions about how to use the spreadsheet, please don't hesitate. And then the most important thing that you can do, ask for feedback daily. Post in the room, ask your questions, make your statements, do it through pictures. Annotate your pictures, but always, always, always ask for feedback. Jose, I like that. Sometimes you feel that the rules are never met. Never is a very definite word. What typically happens, Jose, is that the rules aren't met fast enough for the average user, so they begin to fabricate. They begin to second guess. We begin to form opinions. Being a successful trader is very much about our ability to wait. So this is your plan for success. Take a picture of it, put it in your spreadsheet. And then let's start off by taking a look at that high probability trend trade. The first trade that we're looking for, that my trade is. Define it. My trade is the high probability trend trade. The every advantage, the nothing in my way. Coming from the area where the market is likely to continue. And in order to enter this trade, all rules must be met. And there's only three. So write down what they are. Keep it simple. Strong triggers, no termination conditions, pull back to the area where it's likely to continue. In the beginning, guys, this is your trading plan. This is our first goal, is to recognize that entry. And our analysis is going to start on our 13-2 chart. When you download the Nexgen software, when you open that workspace for the first time, there's only 3 charts. And there's only 3 charts for a reason, because you don't need more than this to be successful in the beginning. Your 13-2 is your largest, slowest chart. It's a broad stroke of a brush. The 13-2, first and foremost, is where we are going to identify the overall trend of the market. Remember, we are looking for a high probability trend trade, and because we always want to be trading with the trend. So if the background on my 13-2 is green, I'm only looking for rules to be met for high probability trend trades long. And if the background is red on my 13-2, I'm only looking for rules to be met for high probability trend trade short. This is going to keep me out of trouble. Fun story. I tell it about twice a week, but it always makes me laugh. John Novak was speaking to a broker one day, and the broker said, "Hey, John, I can guarantee you $1 million in your account by the end of the year." And who wouldn't be interested? John Novak says, "Hey, Mr. Broker Guy, that sounds amazing. How do I make that happen?" The broker says, "It's easy. I want you to fund that account with $3 million, and every time the market's going up, I want you to go short. And every time the market's going down, I want you to go long. By the end of the year, you should be right around 1 million. And it sounds silly. It's a silly story, but it's so true. Don't fight the trend. Keep it easy, keep it simple. Give yourself every advantage. After we determine the trend, we're going to utilize the 13-2. John said, "Mr. Broker Guy, absolutely. I was there." It was a very informal meeting. We're going to gauge the momentum of the market. We're going to make sure that we have an advantage. This is rule number 1 for a high probability trend trade. And we're going to do that with the T3 trigger lines. Your small triggers, the solid lines, break above the large triggers, your dash line. This is what gives us that green background. This is what tells us that we're in an uptrend. Space gets created between the two. The large triggers are widening. They're angled up. I'm a huge fan of the English language. This lets me know that the odds are favorable. What a great phrase. The odds are favorable for the market to continue up. This odds favorable momentum is your first advantage. In a downtrend, small triggers break below the large triggers. Space between the two. Large triggers are wide and angled down. Once again, odds favorable for the market to continue down. What a great feeling knowing that you have odds favorable momentum as you get into a trade. And the reason we wait for odds favorable momentum is because when our small triggers work their way inside of the large triggers, this is what we call a weakening of the large triggers. Recognize the look, because when the large triggers are weakened, anything can happen up or down. One look gives me odds favorable momentum. One gives me anything can happen up and down. Make a decision and commit to the look that starts off with an advantage. Also on the 13-2, we're going to recognize potential termination conditions, areas where the market is likely to stop. This is rule number 2 for a high probability trend trade. Rule number 2, rule number 1, recognizing the trend, all happen on the 13.2, and all of this happens before we ever go to our 5-1 chart. And our 5-1 chart is a smaller, faster chart. And here we are going to refine the broad stroke of the brush. And we are going to recognize our entry spots, our area where the market is likely to continue. By recognizing the best of the best spot on the 5-1, this smaller, faster chart, it allows us to reduce risk and maximize profit. And this is our rule number 3. Your high probability trend trade can be recognized on only 2 charts. Keep it simple. This 8-range market flow chart is simply a confirmation chart. Just a confirmation chart. When your rules are met 100%, we can utilize this 8-range market flow chart for confirmation. So how do we put this all together? Rule number 1 starts on the 13.2, and rule number 1 says that I must have that odds favorable momentum. That I must have small triggers above the large, wide, angled up, that I must have odds favorable. Rule number 1 happens on the 13.2. Rule number 2 says that I must not be trading into an area where the market is likely to stop. No termination conditions. If you're watching the ES right now, we just hit one. If you took that long trade, post your picture. I know somebody did. 13.2. Don't trade into an area where the market is likely to stop. Don't trade into a termination condition, a Fibonacci-based indicator that has the potential to stop the market. It can be Fibonacci resistance. It can be Fibonacci support. It can be yellow 1-to-1 dots, magenta or cyan retracement divergence lines. All of these are going to happen on the 13.2, that larger, slower chart, that broad stroke of a brush. My little asterisk, though, multiple divergences in the same location. Sometimes we'll see this on the 5-1 because our smaller, faster chart may indicate change a little faster than that broad stroke of the brush. So when we're talking about termination conditions, your trigger line location versus the area is helpful. And what that means is if the market is trending down, if my large triggers are down, if my small triggers are down, but I reach an area of support, a Fibonacci-based indicator, and none of those trigger lines break through, this is a termination condition. This becomes an area where the market is likely to stop. And because it is, we will no longer look for short trades on our 5-1 chart. If we trade directly into resistance, none of our trigger lines break through that area. This is a termination condition. This is an area where the market is likely to stop, and therefore, no more trend trades into the area. Even with odds favorable momentum in a downtrend, when we get to that area of support, those 1-to-1 dots, not one of my trigger lines breaches the area. And because they don't, there are no more short trades. It becomes an area where the market is likely to stop, and because it is, this is going to protect us from trading directly into it. And then finally, that asterisk. 3 divergences in the same area. And we're going to see this on the 5-1 before we see it on the 13.2, on that smaller, faster chart. Recognizing that they come from the same area can be a very powerful termination condition. But when that third divergence from a low is higher than the previous, it's a strong indication that the market has the potential to reverse. When that third divergence is lower than the previous, it's a strong indication. No more long trades, no more short trades. It's an area where the market is likely to stop. So rule number 1 gives us the advantage of momentum. Rule number 2 gives us the advantage of not trading directly into an area where the market is likely to stop. Rule number 3 is going to happen on that faster, smaller chart, that refinement. And rule number 3 tells me that I'm going to buy or sell a pullback. Meaning if the market is going up, I want it to come down back to me. If the market is going down, I want it to come up to my limit order. And that area, that limit order, is going to be at an area. Fibs, mid-bands, or one-to-ones that are inside of the large triggers. We will buy or sell a pullback at an area inside of favorable large triggers. So what's that look like if we put it together? Rule number 1 is strong triggers. Writing my rules on the chart. Small triggers are above the large triggers. Large triggers are wide. They're angled up. Rule number 1 has been satisfied. Rule number 2 says make sure you're not trading directly into an area likely to stop the market. Make sure you have room to your next target. I have no fibs, no one-to-ones, no retracement divergence lines. Rule number 2 has been satisfied. Because rules 1 and 2 are satisfied, I'll turn my attention to the 5-1, that smaller, faster chart, where we refine the broad stroke of the brush. My rule says that I'm going to buy a pullback at an area inside of favorable large triggers. So the first thing I need is a pullback. The reversal bar on the 5-1 chart, after all of those up bars, I'm waiting for a down bar. I'm waiting for the retracement to begin, and a retracement is simply a small move in price, counter to the underlying trend. The reversal bar happens on the 5-1. My rules say that I am going to buy an area, fibs, mid-bands, one-to-ones, and that area needs to be inside of my favorable large triggers. So I locate my favorable large triggers. They're wide and angled up. And I locate my area or areas. I have one-to-ones, fibs, mid-bands. So just above, a tick or two above those areas, I'm going to activate my limit order. I'm going to let the market come to me and fill my order, hopefully. And I'm going to take this trade 1,000 out of 1,000 times because I had odds favorable momentum, because there were no termination conditions, and because I waited patiently for the pullback to the area of support inside of favorable large triggers. And the reason we're coming from the area, if we have a fear of missing out, new users will jump in up here afraid that the market won't come back. They haven't developed trust, but their stop still has to be here. If they don't trust the rules and they jump in late, their stop still has to be down here. So we have effectively reduced our profit potential and increased our risk. When we take that trade from the best to the best area, from that fib, mid-band, one-to-one, inside of favorable large triggers, our risk is reduced and our profit potential grows. Go in the other direction. Rule number 1 says strong trigger lines. Odds favorable momentum. Small below the large, larger wide angle down. Rule number 1 is met without a doubt. Rule number 2 says no termination conditions, no areas where the market is likely to stop. Rule number 2 is clearly met on this chart. There's nothing in the way. Remember, broad stroke of a brush. Everything that happens in this bar happens in all of these bars. So we refine that broad stroke of the brush. We wait for the pullback. We recognize the area of resistance inside of favorable large triggers, and 1,000 out of 1,000 times, I will have a limit order waiting there because I know that when I follow these rules, when I have the advantage of momentum, when the market is not in an area likely to stop, when I wait patiently for the pullback to the best of the best area where the market is likely to continue, that 70 to 80% of the time, I should find myself on the correct side of things. Any mathematicians in here? If something wins 80, then it has to lose 20, right? This is where developing trust, this is where repetition comes in. When all rules are met 100%, and this trade doesn't work out for some reason, you have to learn to be okay with it. You have to trust the edge that your rules give you. And I want you to embrace the word next. Don't judge your plan on one trade. Judge your plan on a sample. If I take 10 trades, 2 to 3 of them are probably going to lose. I don't know which 2 or 3. I don't control the market. So I believe in my edge. I believe in the advantage that these rules provide, and I take the trade without hesitation. Are there any questions about the high probability trend trade? This is your foundation. Nishan, I know that you're new. Shabazz, still new. Glad to have you guys here. Daniel H., Douglas T. All of you new guys, let me know. I'm here for you. We've only worked off of 2 charts so far, the 13-2 and the 5-1. And we're able to find that high probability trend trade. When will we use that confirmation chart? This is so important for new users. We will only go to this 8 range chart when the rules for our high probability trend trade are met 100%. When the 13-2 gives us odds favorable momentum and no termination conditions. If you can add to the position, if you're in a position and then you'd like to add more, absolutely you can. The beauty of it is you can do whatever you want. However, you need to make sure that your rules are met before you add a position. When our rules are met 100%, odds favorable momentum, no termination conditions. Nishan, one of the best things you can do for me is post a picture and annotate the chart. Typically when I am teaching the class, I'm not watching the market live simply because I'm focusing on giving you guys the best of the best information. So if there's a picture or a question or something that you recognize, and I'm looking at the ES right now, maybe this is a pattern that you're recognizing. Maybe you have a question about why the market did what it did. If you post that picture in the room for me, we can take a look at what you're seeing and we can walk through it together. And then you can get the absolute best response. Strong triggers, no termination conditions, wait for the pullback. And guys, divergence is true. This negative number, this magenta line form, what divergence means simply is that as price goes up, we'll do price in white. As price goes up, momentum doesn't follow. So this divergence prints, this negative number prints, and all we need to know is that it means that the market has the potential to push beyond the best of the best spot. And because it has the potential to push beyond the best of the best spot, this is where we're going to utilize market flow for confirmation. The first thing I'll confirm is the momentum on my 13.2. Do I have that same odds favorable momentum on my 8 range? Absolutely. Not yet, Steve B. I don't believe. He typically sends out that password the day before. If you wake up and don't see it, check your spam folder. That happens quite a bit. But the real confirmation that the 8 range provides is a 1-bar event from one spot. We recognize our best of the best area after the reversal bar when there's no termination conditions and we have strong triggers. And I line up that exact same price on my 8 range. And because the market has the potential to push beyond this area, I need confirmation. I need an arrow generated by a white bar beneath the reversal bar. I need an antenna bar for a long trade. It should have a small body up top, a long tail with one of those 1970s antennas. For a short trade, it looks more like this, or a yellow reversal bar at the area. On this particular trade, I got my green arrow. This is my confirmation. It also happened to be an antenna bar. This is my confirmation. So I will hit buy now, and I'll take this trade because of the confirmation. And you'll notice 2 reversal bars before, not at the area. We don't pay attention. It's a 1-bar event at the best of the best area. So Steve, when you have second divergence, I think it's even more important because it means that you've lost even more momentum. And I've got a picture to illustrate this. Actually, you know what? I'll do it right here. Quick little divergence lesson. When you have one divergence, very often that pushes you back to your best of the best spot. 2 divergences, even more momentum lost. It'll typically take out the previous pivot, as it did up top here. First divergence is a perfect trend trade. Second divergence lets me know that it can push beyond that best of the best area and typically takes out the previous. So 1 divergence, I've got my eyes on that best of the best spot. As your plan grows, Steve, if you have every advantage, if you have odds favorable momentum across the board, if you have a stacked area of support, some users will go ahead and take a 1 divergence trade at the best of the best area and wait for confirmation for the second. But that happens as you grow with the plan. Because the reality is, and remember, we're trying to build confidence. When I have smalls below the large, when I have no termination conditions, when I wait for the pullback, it has the potential to push beyond. So Steve B, if we line up that best of the best area and we wait for confirmation, because remember in the beginning, we want that memory of success. If there's no confirmation, take no trade, but take those pictures. And what will happen is you will recognize more and more when it's okay to take a trade. When we have strong triggers and no termination conditions, no divergence, pulls right back to the best of the best area. One divergence still takes us back to the best of the best when there's momentum everywhere. So we watch this a lot. Now we're into a termination condition. Now I have 3 divergences off the bottom. Now I have no more short trades. Are there any questions about the high probability trend trade? This is your foundation. This is your my trade is in the beginning. Good stuff. Awesome. So I'm going to go back and let's take a look at your pictures. You guys have been posting this morning. I'm going to go back. If I miss one, please, please, please let me know. Repost so we can get it. Janesh said he made a mistake. Went long too soon. Waited for everything to agree. Entered the trade. Trading with the trend, trading with the triggers. Trading with every advantage on his chart. John Novak, I like this one. Recognizing patterns. Market pulls back to an area of support. Absolutely none of his trigger lines break. This is a termination condition. John Novak takes that pullback to a high volume area. This is a second trade. This is understanding where the market is likely to stop, where it's likely to continue, where it's likely to go, and then taking advantage. John Novak, that was a nice trade. Robert E is practicing replay with larger charts. 34 range, 21 range, 13 range, 8 range. That's a lot of range charts. Robert E, I have no idea what got you into this trade, but it looks like it worked out. Paul, I think we answered this question. When I have strong triggers and no termination conditions, when I have divergence on the pullback, that market flow confirmation, that reversal bar is my confirmation. Ed asking John a question. Paul, notice Paul is doing replay. Paul is practicing. Strong triggers, no termination conditions. There was divergence. Paul, you're in at the mid-band, 109.40. Second divergence prints. What does that mean? Getting in at the first area. I'm not sure why your first target didn't print, Paul, didn't hit. But that second divergence lets us know that this thing can push deeper. And it looks like it's about to do that. So Steve B, one divergence pulls right back to the best of the best area. A second lower divergence, I've had a trend change. My smalls have turned against me. This is where we begin to work on our management plan. But we have to have rules to get us in and rules to get us out. Paul says, sustained trend, riding along. You can see the large triggers through the small. No divergence, pull back to support inside of a favorable large trigger. Goes right to the target. Paul, could we just do this one 4 times a day? Hope you don't mind. I'm going to steal that one for my perfect trend trade looks. Guys, I'm up to 163 now. Well done, Paul. Smalls above the large. 50-50. 50-50 look through midband. After pivot from space. No divergence on 5-1. Price pretty far from large triggers. Even though they're strong. We'll need market flow signal to trade. Paul, you did have a signal. That's little antenna bar, stranded sellers. But I love the recognition of the pattern. Guys, we talk about taking pictures of patterns. When there's a pivot from so far beyond the area, our first potential spot, at least bounce spot, is that mid-band. Paul's recognizing a lot of patterns here. Nice job, Paul. That's one that I would have avoided as well. That's the same picture. What was this picture then? Okay, we've got both of those. And guys, this is what we do. We roll through and we just look. Triggers up, smalls break the area, 50-50 trade. No divergence, pull back to the area of support inside of favorable large triggers. Absolutely perfect entry, Jose. Your stop keeps you safe. Target realized. Target realized. Jose, beautiful trade. I'm going to steal this one for my spreadsheet. Jose had every advantage. Oops. Jose, that one's not printing or not opening. There we go. See if we can get that to open up. Here we go. So many divergences in the same pick. How to take advantage. Rules for a high probability trade are not met. Jose, I like this picture. I know John responded to you here a little bit. If your rules aren't met, don't worry about it. These divergences just let you know that we're probably going higher. 3 divergences in the same area. Third is higher. Lets us know we're probably going up. No, don't worry about taking advantage. You don't have to be in every move. You had a short right here. You had a potential short right here. And we just wait for everything to sort out for our rules to be met. Philip B, small triggers, starting the mix with the large, still below, no termination. Entry at the best of the best spot with the large trigger supporting. Second divergence lets us know that it may go higher. Philip B, one thing I want you to notice, this is huge. We had the advantage of momentum. We also had the advantage of no termination conditions. You had what was probably a 4-tick stop from the best of the best area, which is pretty cool. That second divergence, your stop is right at an area of resistance inside of favorable large triggers. 0950, if you made it to 0750, there's your first 100. And then that looks like 0550, just about. You could have taken $300 on this one from your perfect entry rather than allowing it to stop you out. Great entry though. Beautiful entry. Absolutely nailed it. And I think that was Philip B. I really want that picture because that's a perfect entry. John added 2 picks to the user guide yesterday, talking about divergences, talking about multiple divergences. Go to the user guide, termination conditions, divergence. Alyssa, working on recognizing market flow signals. Absolutely, market flow, antenna bar. Not really in the area, but we're close. You have momentum, you have no termination conditions, you have a pullback. This is a tough one because it doesn't quite make it. So by the time you get in, your stop needs to be all the way down here, Alyssa. It's great recognition. It's a good read. We just didn't quite get to the entry. So when you hop in, it becomes a little more difficult to manage. Paul. Wanted to go long here, but never got the signal after divergence. Maybe could have managed out 10 target, but no trade for your rules. Paul, remember that? We talked about this yesterday as well. The market had just gone up 11 points. Your smalls are getting to the wrong side, divergence prints. Your smalls are on the wrong side. That's just trying to catch the end of a big move. Good picture. I'm glad that your rules kept you out. Carl, smalls below the large, pull back to resistance, gets paid. Smalls below the large, gets in a little early here. Carl, what got you in so early? Still had every advantage and got paid. That's a low entry, my friend. Looking for that area of resistance inside of favorable large triggers makes it more manageable. Nailed it here. Computer lagging. Okay. That happens sometimes. Great recognition. Everything says down. Small below the large. Everything says down. Everything says down. Carl's able to get paid. I love that. John Novak, you need to have a rule that says when you will ignore divergence and just get in. Miss too many waiting for signals when triggers are very, very. John gets good feedback. Been saying that for a week and a half. When everything is perfect, that's when people will typically take that one. Philip B. Mixed triggers, so I skipped it. That's okay. Small below, no terminations yet. pullback to the area of resistance. You could have used that one, absolutely, Steve B, but this is what John was just saying. When small's below the large, when the large are wide and angled down, when your 5-1 is screaming, you have a perfect area of resistance inside of favorable large triggers. Your smalls are below very wide angled down triggers on the 8 range. This is when John is saying, and we did this yesterday too. Let's do it again. Because I think this is a great lesson. I have the advantage of direction. I have the advantage of momentum. I have the advantage of no termination conditions. I have the advantage of an area of resistance inside of favorable large triggers. I have the advantage of momentum, direction. I have one divergence. Paul, he's still got a little bit and he's got tons of momentum. He hasn't hit it and he has momentum on his side. So this is what John's talking about. If it's 8 against 1, take the trade. If everything is perfect except that one divergence, take the trade. If you're on simulator, take it every time. Take a picture. You will learn when it's appropriate and when it's not. Ed says 3 points in 35 seconds. Termination condition. Triggers roll, high volume area. Ed, you had already hit your target. I'm glad that one worked out for you. Utilizing the HVA line. Paul, how do you know these triggers won't keep going above? You don't. Paul, that's the quickest answer ever. If this is your 5-1 chart, almost every pullback to the best of the best area, Paul, small triggers are going to turn against you. They have to. If they don't, you're never going to make it to that best of the best area. But I want you to remember, our analysis starts on the broad stroke of the brush. By the time we get to our entry chart, we have momentum, we have no termination conditions. All we need is that area of resistance. This is only an entry chart. Our rules say we will sell a pullback to an area of resistance inside of favorable large triggers. Notice that it doesn't say we will sell an area of resistance inside of favorable large triggers unless the small triggers turn green. There's a reason for that. These are almost always going to turn against you, Paul. They have to, or we just won't get there. MB, termination conditions, high volume area, catch your target, +2, +6 on the HVA. Ed, notice that MB exits at the mid-band from a high volume area. That's the first target. MB, nice trade, man. Rory B, termination conditions. This is on gold. Smalls inside the large at an area of resistance. None of my trigger lines have broken through. But you said, you know what? We are in a strong sustained trend, no divergence. You absolutely nailed the entry. And you enjoy the ride up to that second resistance where it retests and things slow down, so you exit. Rory, I don't hate this trade as long as you recognize and realize that you traded directly into a termination condition. which means that rule 2 wasn't met for that trade. But I would say you handled it well because you had no divergence, you had momentum. If you're gonna take this trade, that's how to take it. Nice job, Rory. John Novak did an HVA short from higher with a poor trade prior, which he will post to show thinking bad rules good. Divergence from the HVA is a better spot after a termination condition. He tried to go short against everything. When everything rolled, he had an advantage. Jose, coming from a good bottom. You took the HVA trade with your large triggers up, triggers rolled, HVA, able to make a little money. Same thing I told Ed, Jose, is that our target was hit. That mid band was our target. It closes the gap back to the large triggers. So recognize where you're at. And like John says, recognize that you're below everything. You're below everything when you enter after a mid band that just held. That's good longevity. John's largest chart said down. He took advantage of the HVA and it went right down to support. Nice job, John. Jose, trading in a termination area just to prove Mark is right. Oh, I love it. Jose taking one for the team there, guys. Recognizing the termination conditions will liberate us from our money. Jose, thanks for that one, man. I love it. That's funny. You know what? I'm going to put that in my termination conditions section, mostly because you said Mark is right, and my wife would never believe it if I just told her. There we go. Now I can go back and I can study termination conditions. Paul, strong downtrend, all triggers strong, missed the entry at the mid band. He's watching Mark's screen. Hit sell, got both targets. That's okay. I like that you're focusing on the lessons, Paul. But isn't this beautiful? Smalls below the large, no termination condition, no divergence. And what does it do? It pulls right back to an area of resistance inside of favorable large triggers. And it completes the move. This is absolutely beautiful. The one thing I want you guys to recognize, momentum, no termination conditions. Momentum, no divergence, pull back. What if all we did was wait for this trade? Paul, what if this was the only trade you took? That's 12 and 20. That's 32. That's $320 on that trade. In a matter of seconds because you had every advantage. Beautiful trade. Late entry even. Imagine if we'd gotten in at the best of the best. Nice job. Ed, 2 sim trades. Did they follow the rules? That's the key. Did they follow the rules? Carl. I'm trying to see. Anything can happen. Triggers. Divergence on the pullback to support. I can't tell what was happening on your 8 range. And it just pulled all the way back. Once we lost that momentum, it wanted to push all the way back to that larger time frame support, and it did it perfectly. But once we got there, it started bouncing and it came right back to those triggers. Carl, that's a tough one. Nico, everything says down. Nico lets it break the area. Trying to figure out what happened here. Pull back to an area of resistance. It is inside of favorable large triggers. It's a short little pullback. Profits, profits. Nico, nice short. Steve B, first ES trade. Large and smaller down. So Steve, one thing I want you to recognize is your small triggers have already broken through that area, which means that if the conditions are great, we can take a shot at that short. It pulled directly back to the area of resistance inside of favorable large triggers. And you had momentum. And because the small triggers broke through, it was worth taking a shot. And you didn't get greedy. You managed it wonderfully. Nice job. Steve B, 50-50 trade. Conditions were good. You took a shot. You didn't get greedy. Nice job. Let's see. Paul, based on your level of experience, need more focus. Turn mark sound off for most of the morning. Johan says, I don't know. Exit at predetermined spot. Johan, I'm going to say that you do know, my friend. You had small above the large. You'd cleared all of your areas. You had no divergence on a pullback to support inside of favorable large triggers. And you exit at resistance. Johan, that's a beautiful trade. It's actually such a beautiful trade that I'm excited to add you to my spreadsheet. Isn't that amazing? Guys, look, we're up to 166 pictures of high probability trend trades. And you know what the great thing is? Is that it's Bobby's and JN and David S and M Smith and Mark SP and Boyd and Carl and David B and Nico and Alyssa, Nexgen Ben, George T, KR, Bill S, Michael R, Marvin, Ed, Andre, Johan, Philip B, Nexgen Mark, Luciano, Paul, Kathleen. Look at all the different names on that spreadsheet. Guys, these are all people that took a second and said, my trade is, and they focused on that foundation. They focused on following the rules. And all of their trades are available to make me a better trader, which I love. Thank you for that. Guys, I took pictures this morning too. I'm going to share some of mine. I take pictures when I feel like there's lessons. So this was my first one, my first instant analysis, and this is what new users do, and this is why I did this one. They're going, oh my gosh, it's strong, and there's no termination conditions. There's no divergence. Everything is strong. I'm going to take this trade. And then I start noticing that I'm actually trading directly into one-to-ones, that my large triggers are split and not trending together. that there was a reversal bar with a stranded seller right at that 1-to-1. But I took it anyway for the sake of science, and I'm feeling good about it. I'm like, yes, I broke my rules, but everything's going right. Then a high volume area forms from a termination condition. And I'm separated from my money. I didn't follow my rules and I didn't have the best. So at first glance, it was a perfect trend trade short. But when I took a deep breath and I began to study it, I was at 1-to-1s on the 13-2. My large triggers were still above the mid band. My large triggers were split on the 5-1. They weren't trending together and favorable. As you grow with market flow, you'll recognize that a reversal bar from a termination condition with stranded sellers is a little bit of a red flag, and then a high volume area formed on my 8 range. So I thought that was kind of interesting. 50-50 trade, not from a good top, but because I have crazy momentum, great momentum, no divergence, this is my cue to go ahead and try that 50-50. Do we recognize strong triggers, no termination conditions, no divergence, momentum confirmed? I'm going to take a shot at this one from the area. Everything says down. I'm able to get my first 10, and then I go break even. It's a bad top. It's a 50-50 at a mid band, but with all the momentum, I don't take that second entry because now divergence is printed. Now I don't have the perfect scenario. And sure enough, it goes up. Chart reading. Look at my large triggers. My large triggers are above 1, 2, 3, 4 areas. This is a great indication. Price pulls all the way back up. John talked about this one yesterday. Took my first trade when it was 50-50, let it do what it was going to do, waited for all charts to agree, and caught it the rest of the way. Pretty cool, right? 50-50, manage tight, all charts agree through the areas, enjoy the ride down. Steve, have you just tried turning them off and back on? I know that seems silly. That's like Tech 101. Guys, this is a pattern that we see all the time. This was actually John Novak's long trade. Pivot coming from nowhere. Mid-band's that first target. Stranded sellers from an HVA. John Novak went long right here. I took this picture at 7:56 a.m. and I annotated it. This is my anticipation based on patterns. Divergence prints, no signal. I don't take the trade. And what did the trade end up doing? Exactly what we anticipated. It pulled back to the mid-band and went straight to that target area. There's that same pivot pattern. Pivot from space, back to the mid-band, continues the move. Ed A. Fear of missing out. Smalls breaking the area. Could have been in at the mid-band. Good recognition. Nice hold. Trust those rules, Ed. Great recognition, great momentum. Just jumped in a little early. You started watching ticks? Because I see that down bar. Instead of waiting for the best of the best, you start focusing on ticks. And it costs you 2 points. Kathleen, looks like the same trade. You're trading momentum. We break the areas, pull back to the area. Momentum trade, Kathleen, not a trend trade. But it certainly works out for you. You love trend trade is addiction to you, but this isn't a trend trade. This is a momentum trade. There's a big difference between the two. This one doesn't typically work out as much. Look at this. You had a reversal bar from support. It's a lower probability trade. From John Novak's personal plan, stranded buyers and sellers. It's not opening. Paul? Termination condition, 50-50. Strong triggers down. Divergence prints. Never get confirmation. So Paul, this is a great lesson. And this is for everybody. Even off of a strong top, even off of a good termination condition, that midband is where it's going first, almost always. So if we smack directly into that midband, let it close the gap to the triggers before you take that shot. Missed it, talking in the room. First long at HVA of white bar after stranded sellers. John Novak, I hope there was something else going on there other than one divergence on the 5-1, because it looks to me like you're fighting everything. Looks to me that all your large triggers are down, your large triggers are down, your small triggers are down. The reason I say that, guys, stranded sellers on low plus white bar doesn't. 27 years trading, 20 years teaching. Guys, this picture, I want to share with you one of my favorite books real quick. How to Commit Financial Suicide, One Easy Step by John Novak. Chapter 1. They are trading against strong triggers. John Novak wrote the book. Can we agree that there's probably more going on here than what we see in the chart? MB, termination condition. Waits for things to roll, waits for a signal on the market flow chart, takes profits at resistance, market pulls right back, takes second up there at the mid-band. MB, nice trade. MB, let the triggers roll. $13.2 had already put in a termination condition. $13.2 triggers had already rolled, had already put in a bottom and changed direction. This makes more sense when we have this, doesn't it? Like I said, there was probably something else going on. This looks like John Novak hates money. This looks like John recognized triggers rolling from a bottom. I think John's just trying to make my job difficult. Stranded sellers, stranded buyers. He loves these. This is next level on your market flow, recognizing stranded sellers and buyers at key areas. In the beginning, we're using it for confirmation. As we grow with the software, so does our plan. Replay in history. Pivot from beyond the area. Where did it go? Went right back to the midband. After it hit the midband, what did it do? It closed the gap back to the triggers. I'll be darned. Patterns. Traded 50-50 that turned into a downtrend. We'd lost momentum. We had divergence. We never got a signal. The reading on this chart that would have kept you out, Jose, was waiting for market flow confirmation. Waiting for an arrow, an antenna bar, or a yellow bar never happened. So you have 50-50 with divergence, no confirmation. One of the things that I think is so important to remember, we get bored. If you're going to take a 50-50 trade, let it be perfect. No divergence, awesome momentum, beautiful look. Give yourself every advantage when you're removing that advantage. Ed, same one. Divergence, no confirmation. Second lower divergence, probably pushing lower. Guys, I'm gonna let you watch the ES, pivot from beyond the area, pulls back to the mid-band, pulls back to support. We'll read our trigger lines and see what it says. I'm gonna take 5 minutes. You guys trade away, post pictures, think of questions. I'll be back in just a minute. All right, and we are back. What did I miss? John says 4591 was the HVA on all charts. Where did that come from? Over here somewhere? Oh, that's a 21.3. No worries. Kathleen? John likes this chart with divergence. Good stuff. Paul? Small's above the large. No termination conditions. Awesome. Pull back to the best of the best area. Profits taken. Break even. Paul, it's hard to go wrong with that one. You took it perfectly. Nice job. Saved by stops. Having a plan, right? In order to get into the trade, this must happen. In order to get out of the trade, this must happen. Guys, having a plan is where it's at. Sorry, we're going to reset this. So what do we see now? We see a cyan retracement line. No trigger lines go through it. 3 divergences in the same area. Do we recognize termination conditions? Are we watching real time? What tends to happen from termination conditions? Pretty cool, right? Rules are set in place to help keep you safe. Having a plan. Oh, here's a plan. Guys, I want you to look at this plan. It just came across. This is John's plan. John says what has to happen, what his looks are, has pictures of what those looks are, when he will stop, how he will enter, recognizing termination conditions, when to manage, stop trading when. Guys, that's pretty simplified. But even somebody with 27 years, one more page. Sorry. Stops and profit targets. My bad. 27 years, 20 years teaching, still has a plan written down. And this is John Novak's plan. Rodney, it's not. Because in the beginning, unless you're working off of 20 years of knowledge, his plan will just confuse you. Our plans start like this. One trade. What's it going to take to get me in? What's it going to take to get me out? And we're just going to start pummeling ourselves with pictures. Do what the market says. Do trend trade and HVA trades. That's about it. What's an HVA trade? I'm glad you asked. Whoop, financial suicide. When we get through that first trade, when we say my trade is, when we know the rules for the trend trade, and we're ready to add the second trade, that growth point. Kathleen, a momentum trade is a very short pullback. and typically to an area that isn't necessarily inside of favorable large triggers. It's relying solely on the momentum of the market. So it's momentum in and momentum out. Sometimes it works, sometimes it doesn't. It's a lower probability trade, and I tend to not teach it in this class. That's one of those things that as you take the pictures, as you recognize patterns, some people are very, very comfortable with a momentum trade. It's not in my plan personally. Gary, your internet was out. Connect to NinjaTrader. Now that you're back in, just connect to NinjaTrader. Let me pull this up. So if your internet went out, this is probably orange down here. So file, connect to your live. If your internet's back up and running, that should get you loaded up. And then once you're loaded up, your charts will refresh. My trade is, as my plan grows, my trade is the high volume area trade, the HVA trade. And to take this trade, all of my rules must be met. And I write once again, very simply, my rules, there's only 3. And they all have to be met. And just like the trend trade, my analysis starts on the 13-2 chart. Rule number 1 for a high volume area trade says that the large chart must have a termination condition. I must have reached an area where the market is likely to stop. Area of resistance, none of my trigger lines have broken through. Area of support, cyan divergence line, none of my trigger lines have broken through. Rule number 1 says that the termination condition must be true on my larger chart. Rule number 2, we go to our faster, smaller charts, 5-1 in the 8 range, and it says, do not make this trade until trigger lines roll. Do not trade against a very strong trend. So as we trade into resistance, when we recognize our termination condition, we're not going short because we're still fighting odds favorable momentum. We're going to let our small triggers come to the correct side of the large triggers. We're going to allow our large triggers to pinch and roll. That keeps us from fighting strong triggers. And then on the 8 range chart, our entry, we're going to define and place entry at the high volume area, green or magenta, from the market flow indicator. So rule number 1 says termination condition. Rule number 2 says let those trigger lines roll. Rule number 3 says sell your high volume area after the first 2 rules are met. The rules aren't difficult. The patience is the hard part. Because once we get the termination condition, I think we did the math, from hitting the fib until taking the trade was 35 minutes. 35 minutes in this particular moment to give ourselves the advantage. But once we had it, it worked out great. If you didn't exercise your patience and you sold the red line, you got stopped out. If you were mad about it and you sold it again, you got stopped out. But if you just had the patience to wait for the advantage, you got paid. So Fibonacci area holds. Trigger lines roll. Purchase the HVA line. Fibonacci area holds. Trigger lines roll. Sell the high volume area. It almost seems too simple. Only three rules that you have to say my trade is, that you have to be able to recognize the rules, and we start the process over of taking 100 pictures of those rules being met, putting those pictures into your spreadsheet. Any questions about an HVA trade? Pretty good. Did anyone recognize smalls above the large? No termination conditions, 50-50 trade. Pulled back to the area support inside of favorable large triggers that lined up with a high volume area. Did anyone get long at 97.25? Take your first profits, maybe your break even +1 right now. Jose? Place order when the trigger lines were strong, going down. That is a definite termination condition. That's the best entry. Best entry you could have taken. Stops kept you safe. Able to get paid. You had momentum over here. Small triggers broke through, Jose. Nice execution. Kathleen, John Novak gave you some information up there. Ed. Smalls above the large. Not through the areas yet. No divergence on the pullback. You entered at the mid band, trading directly into a termination condition. It gave you an opportunity to get out of the termination condition. You chose not to. Everything turned against you. And you get out for 2 ticks. Termination conditions, Ed. They are a very real thing. Carl? Carl takes the same trade, it looks like. It looks like it, doesn't it? Small above the large, large coming through the area. Pull back to the area of support inside of favorable large triggers with no divergence. Carl says, man, that's a big red line. I'm not going to hope. I'm just going to get paid at a termination condition. Nice trade, Carl. John Novak said HVA at support per his plan. Termination conditions up top, pulls all the way back to support. Lines up with an HVA trade. John Novak says that he doesn't take them from the wrong side of the trigger lines. Maybe he does. They were up. Okay. Fair enough. It's okay. Because that was the phrase. HVA at support per his plan. John has rules in place to take that one. First HVA trade gets out at resistance. Second HVA trade out just above resistance. Nice trading, John. Ed, smalls above the large. No termination conditions. It's a 50-50 trade, but there's no divergence. So you take it at the best of the best area. And then hopefully we're watching, seeing what happens. Nice entry, Ed. Gary says he did not take this trade. Small triggers were inside the large going up. Gary, I agree with that 100%. Your rules weren't met and you didn't take the trade, and I think that that is an absolutely amazing thing. Nice restraint. Because we say all of my rules must be met. Yours were not. Nice job, Gary. John took the trend trade. Looks like he missed the original one. Gets a pullback to his trigger lines and pops in at almost the exact same price. Nice job, John Novak. Ed, isn't it effortless? Oh, Ed. Do we see it? Smalls above the large, breaking through, no divergence. Absolute sniper of an entry. Gets out at resistance. My trade is. My trade is the every advantage, nothing in my way from the area where the market is likely to continue. Guys, I've got 6 or 7 pictures that look just like this with Ed's name. What a recipe for success. Nice job. Nico, how did I know? Smalls above the large, pull back to the area support. Nico, that is a late entry. You took the John Novak entry. Didn't get it here. Grab that little pop back, I guess. Both targets filled. Nice job. Saw it last minute. But your 2 ticks from the best of the best spot, right? Still very manageable. What a great lesson. Still very manageable. Nice trade, Nico. Where is the ES now? 1-to-1s, no trigger lines through. Let's see what happens. What's crude doing? Termination condition. A little bit of an overrun, a little bit of an overrun, straight to support, indetermination. Nothing to do on crude, guys. GS or GC? I'm not sure what GS is. GC, mine comes up quick. 10 days back. Here's gold, termination condition. Triggers roll. Smalls above the large. You've been using 30. Yeah, new months should be fast as well. No divergence from a good bottom. Trend trade has to be managed. Let's just watch the ES. George T. So rule number 1 is strong triggers. We do have strong triggers directly into a termination condition. No trigger lines have broken through the area. So it's very much a termination condition, George. You had momentum, an HVA line, an area of support inside of favorable large triggers. You relied on that momentum to give you a bounce. First target at your trouble spot, your termination condition. Second target, break even plus 1. I'm not sure a better entry. You're about a tick right there. George C., it's a great trade. These termination conditions are going to eat your lunch, though, one day. Yes, Elvis? Johan. Strong triggers up. Pull back to support. Against the triggers, against the triggers. This is an edge trade. And you had just hit an area of resistance that no triggers had gone through. And then you took a second entry directly at an area of resistance that no triggers had gone through. And you kind of got rewarded for bad behavior there, Johan. Yeah, and it's not my place to judge whether you are naughty or nice, but one thing that I recognize, one thing that I want for you guys is that you were very willing to trade into areas of resistance, but you cite resistance as your reason to exit. So this becomes wrong side of everything you're willing to enter, directly into a termination condition you're willing to enter. But when everything looks perfect, suddenly you respect the termination condition. So I'm not saying whether it's right or wrong, because your plan has to be your plan, but it is inconsistent. I would love to see your entry rules to know what's getting you to pull the trigger. And just so you know, I don't completely disagree with this one based on the patterns and the trigger lines. But are you getting lucky? Or was there a little bit of thought that went into this one? Alyssa says strong triggers, no termination conditions, area of support inside of favorable large triggers. Hit target 1 and you moved your stop. And it looks like it stopped you out without ever actually coming back. Because that stop was 97.50, and it looks like the market went to 97.75. Maybe a simulator thing there, Alyssa. But you absolutely nailed that one. And I like that you stuck to your rules. It looks like that simulator fill got you, though, because it pulled you out at break even. But it doesn't look like it ever got back to break even. Rules do rock, don't they? I try to tell you guys that. Why do we trade rules? We trade rules to keep us safe. How come even when you make money, I tell you trade it into termination conditions? Because termination conditions create an area where the market is likely to stop, and it takes away your advantage. And it's easy to say, well, I traded into a termination condition, but I won. How often is that going to work for you? I can tell you that it works so rarely that we utilize it as rule number 2. Termination conditions have such a high probability of stopping the market that it's one of our rules. Odds favorable momentum gives us such an advantage that it's one of our rules. Trading from an area inside of favorable large triggers happens so often that it's one of our rules. These rules were all put into place to give you the ultimate advantage, to make it so that you can put yourself in a position for success. So embrace those rules, learn those rules, use that phrase, my trade is. Paul, smalls below the large, larger above the one-to-ones. You say not even worth typing. Why was this a bad spot to trade? So much time with no good looks, got bored. Well, Paul, let's ask ourselves. Small below the large, but the larger above the area, right? It's a 50-50 trade. You had two divergences going in. I gotcha. In at the area makes it a little more manageable. Second divergence takes you out. A better entry could have helped for sure. Ed waiting for third divergence at fib, never got there. All right. What kind of trade were you looking to take there, Ed? A third divergence from fib trade? HVA trade? Edge trade? So what's rule number one of an edge trade, Ed? Can you type it out for me? Because back in the day when we used to teach it, said your 21-3 must have strong triggers in the direction of the trade. So knowing what I know about the 21-3 being an even larger, slower chart, Ed, how could you possibly have aggressive down triggers on the 21-3 at the end of a 16-point move up? Are you suggesting that your 21-3 turned before your 13-2? Kathleen loves this pictures. Ed, it's just a safeguard. So in this picture, with your triggers rolling, you should have been waiting for 46.0150. That's your HVA trade, but we had already hit our target. Let's see what happened. We've already hit our target. Stranded sellers, add a midband and support. And some would be long there at the HVA line, support from a pivot up here. That's true. But you have to have a repeatable plan. That's what rules do for us. John says this is the HVA look from the plan in 2004. Key Fibonacci resistance. Trigger lines roll. Sell the pullback to the trigger lines. After the small triggers roll over. That's a good one. So let's look at key Fibonacci area, small triggers roll over. So we're looking for that pullback and it lines up. Pretty cool. Is that 18 years? 18 years of the same look. And I think that you're looking for the right thing for sure. But change that word fib to pull back to the small triggers when they roll. And you pretty consistent with that plan from 2004. Good stuff. All right, guys. Absolutely no triggers through support. We're in a little bit of a holding pattern right now, right? So let's scroll through. If you have questions, ask them. If you have pictures, please post them. Termination condition. Right back to the mid band, triggers keep coming, pulls right back to support. Another termination condition. Just waiting for everything to agree. This is crude oil. Let's see if we can recognize some patterns. 3 divergences from the same area. No trigger lines go through resistance. Don't go long. Directly into a fib to the tick. Nice work, John Novak. Don't go long. Everything says up, pulls back to support, triggers up, don't go short. From a great termination condition, straight to the mid-band. We see all this stuff a lot. Jose, what'd you do, my friend? Would I have taken the long trade, Jose? So Jose, and let me make sure I'm looking in the right spot. We are looking 45, 94, 29. So we're talking about directly into resistance, 45, 94. So this HVA line is up here. So Jose, we backtrack and we say, what are the rules for an HVA trade? First, we have a termination condition, and it looks like we have one to the upside as well as one to the downside. So we do have triggers in favor, but I'm trading directly into another resistance area. So this one's not quite what we look for in an HVA trade. Sometimes HVA lines will line up with trend trades. But there's not a lot here to get you into this trade. And without seeing exactly where we came from, so my answer is no, my rules would not have been met. And I like that you're taking pictures, even if you're not taking trades. What an amazing tool to be able to go through and study later. You can re-annotate that chart. Termination on top, no HVA long. Yeah, that's what I'm seeing. Directly into resistance. Great picture though. Resistance held. Small's below the large, larger wide, angled down. If you have rules met, take those trades, guys. Termination condition below us, right? 3 divergences, third one's higher. Do we recognize these things? We just close the gap back to triggers. I like it. Let's study trend trades. Let's look at our spreadsheet and let's see what's going on in the world. We'll start with Carl. Let's see how we did. Small triggers are above the large triggers. Large triggers are wide and angled up. We do have a mid-band, but we have a mid-band coming from a very strong bottom. So Carl takes the pullback to the area of support right at the large triggers. His momentum is confirmed with the 8-range chart and takes that trade right up. This is what we're looking for. High probability trend trades. Just click on random ones. Small triggers breaking below the large triggers. No termination conditions. We get a pullback to the area of resistance inside of favorable large triggers. Divergence printed, so we waited for confirmation. Still able to make profits. Nice trade. Smalls above the large, nothing in the way, no divergence, pull back to the best of the best area inside of favorable large triggers. Beautiful trade. Guys, this is what we're doing. If you are working on your 100 pictures, if you're working on your 100 pictures, download the newest trade tracking sheet because it's going to allow you, it's going to allow you to look at all these examples as you fill your spreadsheet with your own. So as you're studying, if you're trying to figure out, am I following my rules? Do your rules look like these? Termination condition, 3 divergences. Guys, I'm going to go radio silence for just a minute. If you have a question, post it. If you take a trade, post it. I'm going to sit quietly for just a second. All right. Ed says, Crazy Ed got out. Termination condition, early entry, late exit. Jose's asking about PSOs. John shows a picture of it. And this one's in the glossary of common terms too. So we get divergence from a high. The market gives us a pivot stop out. This is your first pivot. Market comes up, takes out the previous pivot by a few ticks, continues back down. It's a definite termination condition. This alone is a termination condition. This right here confirms. Pattern recognition. Now the areas break. What do we see on the ES? Small triggers below the large triggers are above the areas. Ed takes the pullback to the area of resistance just above the large triggers on a 50-50 trade. Price closes the gaps to those large triggers. Stopped out. There you go, Jose. You had the divergence line. You had the pivot stop out. You're at resistance. Nico took the same trade, 50-50 trade. In at 96.75. Takes 2 points on the first one, $100, gets out break even on the second. Nico, very well managed. I like that you guys have that exit plan in place. And one thing that we're noticing an awful lot of is that when you take a 50-50 trade, and it's a lower probability trade, getting that best of the best entry allows you to manage it. If you have $100 in the bank and you get stopped out for break even plus a tick, sure does make it easy to wait for that next one. $50-50 trade. If you took it, you had to manage out. Notice those large triggers never made it through. John, you can add whatever you want. 50-50 short on the 13.2 is more like 10.90 when the 21.3 is up strong. It's true. I don't have a 21 chart. You bet, Nico. And now we've hit those one-to-ones. Later in life, it's okay. Guys, one of the great things about Nexgen software is that in your first 6 months, it's like kindergarten. We're just learning. We're trying to figure out all the things that we know and that we don't know. And then things start to click and we begin recognizing patterns. Absolutely. You're doing great. You're right where you need to be, Kathleen. Remember when you were a kid and you went to kindergarten and you just hung on every word and you're soaking it all in and you're learning so much? That's where we're at in the beginning. And John's exactly right. After the third month, you'll be good. That's okay. We're all doing it. We're all taking naps and eating paste. It's good stuff. It's just education. You're never too old. That's okay. Regretting it won't do you any good. Have you bought it now? Maybe you weren't ready 10 years ago, right? Maybe 10 years ago you weren't in the right frame of mind to be successful with it. If it wasn't for my second spine surgery, I would have never learned it. True story, I tried to trade this 12 years ago after my first spine fusion. And I didn't do anything to make myself successful. I didn't study, I didn't take pictures. I just lost a few $1,000s and then I quit for a decade. And I said, man, that's not for me. And I went on with life. And then I came back. And guys, I'll be 50 in a couple months. I'm still young. But now I'm doing it right, just like you guys are. Now I've defined my trade. I take my pictures. I have my exit strategy. Usually they stumble upon it, Nico. Somebody goes and they Google day trading and they see Nexgen and then they sign up for a free demo. Or you guys tell your friends. John and I in stereo there. When you guys tell your friends, hey, look what I found. That's it. Heard it from a friend. I like it. I like that you're impressed. Guys, I'm still impressed. I teach the class. I'm still impressed. Alyssa from the father-in-law, that's good stuff. Jose saw it on Instagram. Social media works. John wrote it, it still impresses him. You know what impresses me? Is that the patterns are so consistent. They always say you got to know where to buy and where to sell. There's so many patterns. And we just take advantage. We take advantage of the patterns that give us the highest probability of success. You guys ready for my pick? Got this one in my spreadsheet. This just reminds me. That's like 1992 internet buffering. That big shark there, that's the institutions. Those are the guys dumping millions of dollars into the market, creating the trends. Those are the guys that are selling at resistance and buying at support and making things happen. Next-gen news users, we're taking advantage of all their hard work, of all their ability to accept risk, of their ability to move the markets. This is us. When a trend is established, we take advantage of the trend. MB taking your last trend trade long at 03. Try to keep it simple. Buy at support and sell at resistance theory. Ed, best loss you've ever taken. 50-50 at the fib. First one didn't work, so you figured the second one would. Johan, small triggers above, pullback. So you say that you were trailing the stop. Looks like we took one entry here. You hit your target. So Johan, one of the great things that we need to do is recognize when it's appropriate to trail a stop. So you got in, you got out of this long, I like it, got back in. There was nothing to trail your stop behind yet. Keep it underneath that pivot. After you hit the target, just exit. Exit at your target. Hindsight was to get out at resistance, absolutely. Resistance is certainly a target area, Johan. Ed, even without John's picture of the 21, because John, Ed, I want you to see your small triggers are through the area. Your small triggers have broken through. This gives us the momentum. Your large triggers are still above the areas. So when we talk about 50-50s, 50-50s isn't a reference to your odds of success. 50-50 refers to 50% of your triggers above the potential area to stop the market, 50% or below. So this smalls through the area, says that if the conditions are great, take a shot. But because the large have never broken through the area, and we know that trigger line location to the area helps us understand whether or not they're going to hold or break. It's a good one. TTFM. And one thing that you can notice too on this one is look at how far, and I love this pattern, look at how far price pulled away from those large triggers. That's a big gap. It loves to close that gap. John's story, he used to call a floor trader every day, and his only job was to ask every big institutional trader where they had major orders every day. John called him every day for 6 months before the open and told him where they had the orders. Those were the fib levels. When he could tell him what the big boys were doing before the day began, he knew he was on point. Paul, gap theory. Let's see where we're at. And let's just do it simple. So typically what we see, price pulls away from the large triggers. It loves to close the gap. Price pulls away from the large triggers. It loves to close the gap. Price pulls away. It loves to close the gap. Price pulls away. It loves to fill the gap. So what does that do for us on the 5-1? It's price's desire to close that gap to the large triggers that pulls us back to that area of support or resistance. That's why we say trade an area inside of the favorable large triggers. So you see it on the 5-1 even more. Price breaks away, closes the gap. Price breaks away, closes the gap. This is the smaller, faster chart. So if we get that same pattern on a larger chart, it's like a slingshot. Amen, John. It's like a slingshot, Paul. The further away that we pull from those large triggers, the more likely it is to snap back. So if I look at my spreadsheet, whoops, and I look at these pictures that say no area, pivot to the midband. No area, go straight to the midband. Look at how far away the large triggers are. Price closes the gap back to the large triggers. This is a pattern that we recognize over and over. Pivot not from an area. Market pulls right back to the midband, closes the gap back to the large triggers. Pivot from nowhere, goes to the midband, closes the gap back to the large triggers. Straight to resistance, closes the gap. And we see this a lot. Pivot from nowhere to the midband, closes that large gap. So this is one of the patterns that I started recognizing a while ago. I like to point them out in class. Pivot from nowhere, straight to the midband resistance, market closes the gap. And then we read our indicators to see what it says. Beyond the area, straight to the midband, closes the gap. Does that help, Paul? You're gonna start noticing it. If you're thinking about it now, you're gonna start noticing it. It's that same gap close that gets us back to our best of the best spot for entry. And then we read our indicators. Price pulls away. Look where it pulled back to. Right back to that gap.